GVF is in great shape. FY 2021 was an extraordinary year for the company with total shareholder returns over 32%. I think Miles's letter in the annual report covered off FY 2021 in great detail. And the team also shared with us 5 recent case studies, which hopefully provide investors with some great insights into the portfolio. As well as the detail in the annual report, we also did a 4-minute video summary of FY 2021, which you can find on the homepage of the GVF website. For today, though, I thought I might just talk about where the company stands and what we might be able to expect over the coming months and the coming years. Now, many of you know GVF, but for those of you who've joined us recently or those of you who could just do with a quick reminder, I will spend a moment talking about who we are and what we're doing for you, our investors. Now, we have a very differentiated strategy at GVF. We're not stock pickers. Instead, our core skill set is an ability to unlock value from investments in our portfolio through a variety of hands-on techniques, the most obvious one being shareholder activism. Our stated aim at the Global Value Fund is to target share market-like returns, but to do so with a much lower risk profile than a portfolio of international shares. Essentially, we're aiming to be the steady Eddie in your portfolio. What we're looking to provide investors with is 2 sources of return. First, the source of return that comes from the underlying assets that we've purchased at a discount. And then second, the returns that we make by unlocking the discounts that we've purchased those assets at. And the way we achieve that lowered risk profile and that first source of returns is through diversification. Now, most of you will be familiar with the 2 pie charts that we update every month in our monthly, but if not, here is how they break down. Starting with the assets, on a see-through basis, GVF typically is only ever partly invested in equities. As you can see here, listed equity forms 40%. We then hold listed debt. We then have some listed private equity and some listed hedge funds and so on. Typically, we're only invested, as I said, partly in global equities. By investing globally, we also end up holding a basket of currencies. But again, our entire philosophy here is about driving risk down through diversification. And the basket of currencies we hold largely reflects the global investable universe. So we have a large US dollar exposure. We then have some euros, and then we'll have a large Aussie dollar exposure. Now, the Aussie dollar for an Aussie dollar denominated company like GVF is the lowest risk currency for us to hold, hence its large presence. Now, on its own, this underlying portfolio of assets on the left and the currencies on the right is a unique and conservative portfolio, and the returns from these make that first source of return that I referred to earlier. So just to be clear, if we take the assets and the currencies we've held over the life of GVF and we attribute those returns out in graphical form, they look like this. The dark gray there at the bottom represents the underlying assets that we've just run through. Then there's a light gray on top, which illustrates the returns generated from the basket of currencies that we held. And as you can see, this is the basket of assets and currencies has produced a conservative rate of return of around 6% per annum. And that's what we would expect: low risk, low return. The way GVF then targets higher returns in spite of this low risk portfolio is to strap on top all of the discounts that we unlock doing what we do around the world. And this is that second source of returns. This top navy line shows GVF's net after all fees and costs investment returns. And the line hopefully illustrates the market outperformance that I believe we have delivered through time. Since launch, GVF's annualized net returns have been close to 11% per annum, and that's a result that's been achieved on that much lower risk profile that I was referring to. Now, probably the most important tool that we use to ensure that shareholders directly participate in the returns that we have generated is that we aim to pay out all of the returns back to shareholders over time as franked dividends. Now, this slide shows all the dividends we've paid out since IPO, and it hopefully shows that consistency and reliability of the 8 to 9 cent grossed up dividend stream. Since IPO, investors have received back 56 cents in value on their initial $1 investment. On top of this, and after the payment that hit our accounts on the Monday just gone, our profits reserve sit at 21.5 cents. So the next 3.5 years of dividends at that current dividend payout rate tucked away for the future. Now, a question that came in from John Thompson ahead of this presentation was, you say that the reserve can sustain the current dividend of 3.5 years, but is that true of the franking balance, or could some dividends be less than 100% franked? I thought I might answer this question for you here, if you don't mind, John. And the short answer is yes. It is possible that some of our dividends might have to be partially franked. We have had to do this once or twice in the past, and this is because GVF is a company that invests internationally. So collecting franking from the income of our underlying investments is quite rare. You only get that franking if you invest in Australian assets, and we're obviously investing around the world. The majority of our franking that GVF collects is from the tax that the company is paying on everyone's behalf at the company level. If it does get to the point where we have to partially frank a dividend, what we've tended to do as a company is top up the dividend element so that the total grossed up dividend remains steady state. Anyway, I hope that answers your question, John, but do drop me a line if not. GVF has started FY 2022 off well. The portfolio is up 6% in the first 4 months of the year. And we will continue to stick to our knitting of protecting shareholder capital with ruthless risk management while maintaining that semi-annual consistent dividend of 9 cents grossed up. Just one more graph from me, if you'll indulge me. And this is a graph that shows every single investment that GVF has ever made and the profit or loss on every single one of those trades. And I always love this graph because, in my opinion, it tangibly proves that point of a skewed risk profile. In other words, our very high win-loss to loss ratio.